So yeah, as I said, we'll go back on the year that has passed with some good and less good news. Before I jump into the data, I want to say a few words about Catalyst Fund. We're an early-stage VC fund focused on climate adaptation, resilience across the continent. We invest in real product and services, allowing the continent to adapt to the negative effects of climate change. We have already built a portfolio of 25 companies across the continent, and will continue to do so in the coming years. Now, about the engine powering some of the data that you will see today, Africa, the big deal, it's a database and a newsletter. We track deals above $100,000 in the continent since 2019, and there's a newsletter that's also linked to that. Take a look. Everything you will see today is out there, available. So yeah, take a look on your side. All right. Some good news. We need some. So we'll start with that. First, good to take a broader view on what has happened in the past decade. 14x. That's basically the multiple of startup funding between 2015 and 2025. If this was a startup, this would be a decent number, right? So, as Christophe alluded to, this year we're already at $2.8 billion of funding. That's as of mid-November. So it's very likely that, yes, we will get to the $3 billion mark. And that will be the first time that we get to this level since the hype of 2021, 2022. So that's definitely exciting. There is a bit of a rebound after what was definitely a tough 2024, and that's, of course, a great news. If we look at things a little bit in a different way of slicing it, so that's basically 4-quarter rolling period, we can see that these rebounds actually started already some time ago. And basically, if we look at fourth quarter 2024 to third quarter 2025, we're already at $3 billion on this 12-month period. So the rebounds already started for some months already, and which shows that it's not just the past few weeks, past few months that have been good, but basically it's been already a year of things shaping in the right direction. All right, if we look at just the year 2025, if we zoom in even a bit more, as I said, we are close to 2.8 billion actually of startup funding across the continent. 1.5 billion out of this is actually equity. The rest is debt. We'll come to that in a minute. The other exciting thing is that this doesn't come just from 5, 10 very large rounds. It's actually close to 200 companies in the continent that have raised over $1 million last year. And that's, again, you can see, if you look at the past 12 months, it is about the same number. So this trend is definitely accelerating. That's the curve you can see here, the number of startups that raise above $1 million. And that's also a good indication of the trajectory we're in. All right, I talked quickly about debt earlier, so that's something that has been also going on for the past couple of years now. And at this point, we are basically at the highest ratio of debt when it comes to startup funding in the continent. It's good because it's extremely needed. The sector we focus in, climate tech, with Catalyst Fund, definitely is a sector that needs debt. We cannot just finance assets with equity. And so it's good to see this asset class also growing. We hope this trend will definitely continue. But yeah, over 40% of the startup funding in the past 9 months was debt. We continue on the good news, and while there is definitely still concentration of funding in 4 markets, what we call the Big Four, so South Africa, Nigeria, Kenya, and Egypt, when we look at the number of deals, actually the ratio of deals taking place outside this Big Four is at its highest now, so it's 33%. 1 in 3 deals takes place outside the Big Four. It's very unlikely that the concentration will change. We'll come to that later in terms of dollar amounts. But seeing that the number of deals outside this Big Four is actually growing in absolute and relative terms is definitely a good news, showing that these ecosystems are also on the rise. Climate tech, a sector close to my heart for sure. Also on the rise in the past couple of years, we are now close to 40% of all the dollars invested in the startups across the continent going to climate tech specifically. Again, that's a trend that's been really growing. And yes, fintech remains the leading sector in the continent, but it's good to see other emerging sectors growing year after year. Different way to put it, if we look at basically the 100 most funded startups in Africa since 2019, 26 of them are actually in climate tech. The same graph on fintech is basically at 79. So yes, there's quite a few, 46. Quite a few more in fintech. All right, exits, crux of the matter. So since 2019, we have recorded 206 exits in the continent. Not all of them were necessarily great exits, but they were exits. And you can see this year, 42 exits across the continent. The last two were actually the past couple of days. Now, if we look at disclosed exits, so exits where we actually have numbers, where we know there has been a certain amount of liquidity generated, the total amount is about 3 billion. Which is a big amount, but comparatively to the amount injected every year in the continent, if you remember the first slide, that's not enough for sure. Now, definitely these exits are taking place, and as I was saying, just this week, we had 2 exits, 2 IPOs actually, one in Morocco, a startup called Cash Plus, and another one also in South Africa, a startup that just listed on the Joburg Stock Exchange this week. So these things are happening more and more. It takes time, but I decided to put that in the good news because we often talk about exits rather in a negative way, because we say they are not happening, just showing they are happening, not enough for now, but they are happening. All right, now on the more concerns, or as someone we all know in the ecosystem wrote a couple of days ago, early, not broken. So one thing that we have seen in the past 2 years is that cycles are getting a bit longer, right? So on the top side of the graphs, you can see how long it was taking startups from a round to another, from launch to pre-seed, pre-seed to seed, seed to Series A, and so on. And you can see at the bottom how long it's taking now. The not so good news is that it's basically doubled. So where it used to take about 11 months, 12 months a year for a startup to basically raise, to go from pre-seed to seed, it's now taking about 24 months. So double the time for basically for this conversion. There are probably a number of explanations behind that, and it's not necessarily only something we're seeing in Africa. This is a global trend. But it's something to have in mind at all the stages. For founders, to know that it takes a bit longer. For VC investors, to also have that in mind in terms of graduation rates, and also for LPs, and what are the implications of that in terms of timelines of funds. So definitely an important trend. We'll keep monitoring that in the coming years for sure, but it's an important change in the paradigm. All right, this one is also important. If we look at the past 2-3 years, there has been traditionally a lot more small deals, let's say below $1 million deals, than large deals above $1 million, which is healthy and normal. What we are seeing this past 12 months or so is that we have more or less the same number of deals below $1 million as deals above $1 million. The good news is that we have more large deals. That's definitely good. It's a proof of ecosystem maturing, but it's also a bit concerning in terms of what this means for the coming years. There is definitely not enough capital going to early stage deals right now in the ecosystem, which is posing some questions on what will be fueling the future Series A, Series B in the coming years. So that's something definitely to watch and for us to have in mind. This was shown by Christophe earlier, but also linked to the previous statistics. If we look at the 27 VC funds that have closed or had first close or second close or final close in the past 2 years, they've collectively raised 1.8 billion. This is just focused on Africa. And as you can see, most of them are actually focused on the seed to Series A stage. Couple of years ago, some would consider that as the missing middle, so well, it looks like the middle is not missing anymore. Now, what we need to pay attention to is the pre-seed and then much later stage, Series B and beyond, where basically there is a bit of a gap. So that's also important to keep in mind. We talked about that earlier, concentration of capital geographically. The top dotted yellow line is basically the share of funding raised by startups in the Big Four, so the four markets I mentioned earlier, Egypt, South Africa, Kenya, and Nigeria. You can see this is ridiculously stable, between 80–85% for the past 5 years. There is no reason for this concentration to change. Those ecosystems are ahead of the curve. These are the ecosystems where the larger deals are closed. And so therefore, if anything, this concentration might just increase because this is where you're going to get the mega deals. If a move closed a $300 million round in the coming weeks, the concentration in Nigeria will increase. So this is not something to necessarily worry about. It's actually very normal. These ecosystems are larger. They started earlier. They have a head start. The concentration will continue. But as I say, on the other side, what's important to look at is the number of deals and the growth in absolute terms of the other ecosystems. So the fact that these are concentrated doesn't mean that the other ecosystems are not growing. Put differently, if you basically look at the 100 most funded startups in the past 5 years, 79 of them are actually in these 4 markets, 23 alone in South Africa. All right, this is quite a bad news. Investment in startups funded or co-funded by female founders has never been as low as today. That's the yellow dotted line. You can see the share funding raised by startups with a female co-founder. We're below 6%. It's never been as low. And you can see a clear trend since 2022 because unfortunately when there is capital reduction and crisis, it's often when gender balance is the most impacted. And so that's a slide that unfortunately we keep showing conference after conference. It's not going in the right direction. And there is no flip side on this one. It's not like the concentration where this is normal and so on. This is completely abnormal. It's also not a problem of pipeline because this ratio is much higher at pre-seed than at Series A, Series B. So it's a problem of conversion, and how do we continue backing female-led startups beyond early stage? So yeah, I hope this one will also stick with all of you because definitely something we can do more on. All right, now what? Looking ahead, as we are about to end the year, what are we going to go into in the coming years? To look at that, first we can do a bit of a retrospect and look at how Africa compares with the other ecosystems globally. I mean, it was said earlier, Africa VC is basically below 1% of the total global VC funding. So this share is definitely low. However, if we look, if we basically put everybody on the base 100 starting in 2020, we can see that Africa has basically resisted better than other ecosystems in terms of startup funding in the past couple of years. So 2020, 100, now Africa is at 209, which means that there is twice as much funding that went to startups in Africa this year than they were in 2020. Comparatively, Asia Pacific, it's about half. So it's also something that is important to keep in mind when we think about the tough, 2024 we have had, and even 2023, is that yes, there has been a reduction of the capital allocation. The market has been impacted, but comparatively less than in other regions globally. So also something to keep in mind, and it's good to see the resilience of the ecosystem. We talked a little bit about that already. So there was a period of slowdown. In gray, you can see a period of stabilization, and now definitely a more growing period that's 12 months rolling. What's interesting is that when we compare in dotted line at the top, the global VC ecosystem, the global VC market with Africa at the bottom in blue, you can see the correlation is almost perfect if you move it 6 months to the left. So basically, whatever is taking place in Africa in terms of funding, VC funding is actually almost perfectly mirroring what's going on globally with 6 months delay, which also tells us that if we want to know what's going to happen in the coming half a year, we can look at the global VC market and expect the same to basically hit us in the coming year. So the good news right now is that globally the VC markets are growing, and as a result, we can expect this trend to continue. Our projection, 2025 is an easy projection. We are just 4 weeks away, so we should be at about $3 billion, which is already quite a significant growth compared to 2.2 last year. And we expect this trend to definitely continue in 2026, maybe more in an healthier, more resilient, and more stable way than some extent the crazy jump we had in 2021. But the growth hopefully will continue to be there, and it's also the early signals we are seeing is showing that. That's it. I don't know if we have time for questions. Do we? Don't we? But otherwise, thank you very much.
Thank you very much, Maxime.
No questions.